So we're coming up on one of the potentially most volatile times in stock market history. Today, I'm going to talk about how to trade it, how to capitalize on it, and how to be safe. The election's just a few weeks away. Better get ready. Hey everyone, Lead Trainer with Stocks to Trade, Tim Bowen here. Be sure to like, subscribe, and share with your friends. We have a bunch of content here. Love helping you become a better trader, and one of the best things you can do is ring that bell and you'll get notified instantly when I go live. I had a recent stock, well not recent, actually today, the day I'm recording, KXIN. I went live at 8:30 and we were talking about this stock had the potential to really run if it broke the previous day's highs at 4. You can see when this thing broke 4 at 9:45. If you've watched all the other videos, you know one of our favorite times as momentum traders is that 9:45 window. This stock broke that whole dollar, half dollar, previous day's high, did a dip and rip at the precise time we love, and proceeded to go from 4 to 13.40. Doesn't mean you catch the whole move, but if you're on the pre-market prep, live here on YouTube, we're talking about these kind of ideas every single day. So ring that bell, subscribe, and be notified right away. And if you really want to get in depth, check out the Steady Trade team. Hit that link below. We go live twice a day, every single day. There's 2,300 archived webinars. Tonight, I'm doing a strategy session where we're talking about swing trades. We talk day trades. We talk swing trades. We talk longer term holds. We don't discriminate. If a stock has movement, if a stock has volume, if it has potential, we look to trade it. All right, that being said, let's get started. So the election's coming up in a couple weeks. A lot of people are concerned, stock market wise. Remember, I don't talk politics. I only care at the end of the day. I may sound like a classic greedy capitalist, but at the end of the day, all I care about is recognizing opportunities to make money. I'm not here to argue this party versus that party, this idea versus that idea. I want to make money. I want to help you make money with the best trade setups. So that being said, I'm not even going to talk about a particular candidate or anything. I'm talking about how we're going to react to the election. And as I was about to say, right now, I get a lot of questions in those Q&As, and one of the most frequently recurring questions is, what's going to happen in the election? How do you trade the election? What do you, et cetera? What's your prediction? So I'm going to do a prediction, and then I'm also going to tell you how to use that prediction to trade these volatile markets. So, you may or may not be shocked what I'm about to say, but I expect basically a verbatim repeat of 2016. And again, this video is not going anywhere. So maybe you'll be watching this video on November 4th or November 5th, and maybe I'll be right. Maybe I'll be colossally wrong. But I expect, again, a very similar repeat. And if I go to the 10-year chart of the SPY, you can see this trend line that I've drawn. I might have even drawn it on a recent YouTube video. But ever since those lows on the S&P 500, which is the main index we track, we really got that ugly times back in 2007, 2008, 2009, the economic crisis. Then we started to base in kind of 2011, 2012, and the trend has been up. Sure, we've had dips. One of them was the last election. Obviously, one of them was the coronavirus. But at the end of the day, the trend has remained the same. So I expect that trend to continue. No matter what happens with the election, we're going to get a shakeout. So you can go back to November of 2016. And it's always interesting to me because I remember November 2016 and everyone was talking about the end of the world. And if you zoom in, look at this little blip for a week post the end of the election, and then the day following the election, we dropped, and then look at that bounce. I mean, huge bounce. So why does that happen, and why do I predict the same? A saying that I always like to use, and I borrowed this from somebody, I can't remember who. Maybe you drop me a comment if you find out who originally said this. Because a lot of people have resaid it, but markets hate uncertainty. And listen, the president in 2016, unheard of, no one expected him to win. No one, he kind of came, the poll said this. We had a lot of uncertainty. The market did get really shaky, really concerned, but then it bounced and then started grinding higher all the way, basically until we had the big collapse with the coronavirus. And why? Okay, why do I expect a couple big down days post-election? And again, timestamp me on this and fact check me. Drop me a comment. I'm not afraid to be wrong. That's actually one of the things that, especially in short-term trading and day trading, you have to be okay with being wrong. That's why we have stop losses. That's why we have trade plans. So drop me a comment. Maybe I'll be colossally wrong. But why does that happen? Because at the end of the day, the market has to decide to filter that information, decide what it's going to do, and then resume a trend, whether that be to the downside or to the upside. In my opinion, the economy has never been stronger. Post 2016, the economy has never been stronger, even into the coronavirus stay-at-home shutdowns. I mean, at the time I'm recording, a lot of businesses still can't open. Restaurants are running at lower capacity. Retailers can't let everybody in. Gyms can't let everybody in. Bars can't let, a lot of the service-based economy, a lot of retailers, etc., are still closed. But yet we're seeing constant rays of light, okay? Jobs numbers been improving through the coronavirus. That's what blows me away. It'd be one thing to see the jobs number trending higher in quote-unquote normal times. We've seen, businesses, if you're in the right sector, if you're in technology, et cetera, we've seen a ton of breakouts in, Zoom today hit all-time highs. Everything technology running. We've got 5G in our pockets now. The 5G phone is out. A ton of people are working from home. They're more productive. One of the things, an anecdote I saw the other day, and it's just pretty wild about what the benefits of working from home. I saw a story of a young person. I don't remember if it was a male or a female, but they were working for Google and Facebook, full-time jobs, working 50 hours a week, and we're still getting all their work done. So it just shows you the beauty of technology. And I think that's the biggest thing when you go back to previous crashes, whether that be 1987, whether that be 2007, some of these other times, or early 2020 in the coronavirus. I think one of the biggest reasons we lifted back and we're all the way back to highs is because technology. It's there. I mean, I live in the middle of nowhere, Michigan. I have 350 megabit internet. I have a job where I can work from home with trading, doing training videos. Nothing I do necessitates leaving home, and that is creating better morale, better productivity, and the tools we have are just unprecedented. I know the internet's been around for 25 years, but the internet today is nothing like the internet of the dot-com boom. So, that being said, here's my prediction. And how do you trade it? Okay, how do you trade it is you look to go to cash. Remember, cash is a position. I would hold no positions long or short into the election. Remember, you're not trying to, machine gun spray stuff at the wall. Hopefully something sticks. Hopefully make money. You're trying to target consistently repeatable patterns. And we saw it in 2016. I think we're going to see it again in 2020. Go to cash before the election. Be sure to vote, okay? And listen, again, I don't care what side you're on. Do your research. Do your due diligence, just like you would with a trade. Cast that vote. Go to cash for a few days. Look for that trend to develop. And if we're a week later and the market's steadily downtrending, it's when you start shorting. Get your options, get your puts, okay? Go short. Otherwise, if I'm right and we bounce back a week later, we start trending higher, technology, okay? Cloud computing, handheld computing, phones, 5G, remote work like Zoom, remote exercise. One of the great swing trades as of today was Peloton. I mean, Peloton is up, I believe, 400% on the year as of today, maybe even higher. I think it might be 500% as of today. So stay-at-home play. What I love about Peloton is it's stay-at-home play and it's technology, and and it's just one of those things that just makes sense. Work out from home. You don't have to worry about the people not wiping down their weights at the gym, etc. So, all right, everyone, stay safe. Cast that vote. Exercise your right, and go to cash. And then join the trend when the market stabilizes. Don't try and play guessing games when the market's gapping down higher. Because, again, I expect we'll have a hard gap down the next day. I think things will, post-election, there's going to be a lot of uncertainty. I'll be in cash. You can short. I say go cash. Avoid the uncertainty. Doesn't matter where the market goes. All right, everyone. And listen, I'll be there. Election day. I'll be live 3 times that day in the Steady Trade team. We'll be talking trades. We'll be talking strategy. We'll be talking macros. We'll be talking the economics, indicators that move these markets. And again, every single day. You can join. You're there for a year. Some students stay for multiple years. It's the best way to learn. And I'm there every day for you talking about these concepts. All right, everyone. Have a great day. And as always, like I mentioned, drop that comment. Was I right or was I wrong? I'm kind of curious if you're watching this video in December or January or further down the road. We'll see where things shake out. And as always, have a great day, and we'll see you the next time.